Hello and welcome to CX Today. My name is Charlie and today I'm delighted to be joined by 5 excellent customer experience analysts to run through all the latest news from the space. Yesterday I'm delighted to be joined by Zeus Caravala, Principal Analyst at ZK Research, John Arnold, Principal of J. Arnold and Associates, Dan Miller, Lead Analyst and Founder of Opus Research, Rebecca Westman, CEO and Principal Analyst at Valois, and Michael Fawcett, Founder, CEO, and Chief Analyst at Arian Research. It's great to have you all join me once again, and let's get right on into this news. And I want to start with the rumors of Zoom making an alleged move to acquire Five9 2 years after its first attempt. So while Five9 has confirmed that it's not pursuing any such acquisition, it did reveal that it was approached about an acquisition. It's an interesting topic to discuss, and maybe we'll start with you, John, if you want to kick us off by sharing your reaction to that news.
Well, maybe second time's the charm here, but it's not going to be. And I think it may speak to the idea that Zoom is trying to get into this market in ways that, it's just not, they're not getting there as fast as they probably want to be. And going up market, for the more complex enterprise scale deployments is not their forte at all. That's why Five9 was a good partner for them to do that. And I think they're seeing now that if they had done it right the first time, we wouldn't be having this conversation. But now here we are, and I think it's too late for that move. And Zoom will continue to keep doing it their way, and we'll see where that goes. I like Five9 better as a standalone. I always have. And, I think it's healthier for the market to have more of these pure plays out there. But I think they're also realizing they can only get to be so big, and the one-stop shop for contact center is only going to work for some scenarios. There's a lot that want to have that UC piece added to it, and that's not their game. So there's limitations to being a standalone as well. And maybe they're seeing that they have a limited runway to continue that path. But they're viable. They're making money. So, I don't see why they need to sell right now. But if the right offer came along, I'm sure they'd be game. And
I think the negotiations were very much like when a sports team doesn't want to keep a superstar. It's like, we'll offer you this. Oh, I want this. And you both agree to walk away. I think there was maybe cursory discussions at best. And understand both are publicly traded companies. So if you can make an acquisition and get a good deal on it and it's accretive to the stock, you do it. If you could sell the company and it makes the shareholders money, you can do it. But I don't think there was any seriousness there. And when the deal fell apart, John, I 2 years ago, nobody from either company really seemed all that upset about it. I think Five9 was going to get acquired, realized they are better off standalone. And Zoom, Eric's a builder. Eric's not a buyer. He buys small companies that he can tuck in like WorkVivo and things. But he is a builder, and maybe they're not getting there as fast as they can. But let me tell you something. I think 2024 will be the year of Zoom Contact Center. From everything I'm hearing internally there, they are all in on contact center, and that's going to be their big push this year. They went through the phone phase, right? They've gained traction there. And I think from a Zoom perspective, I think trying to integrate two companies roughly equal size is a very difficult thing to do. The back end architectures are quite different. And so this was, to me, their best path. And like I said, I think the acquisition rumors were just maybe cursory discussions at best. I think there was probably that tried to broker it or something, but I don't think there's anything serious.
But Zoom doesn't have to compete against Microsoft in contact center, right? That's a safer bet for them.
We'll see. I figured that a generative AI just made something up in its spare time, and when I started getting some questions about it, I said they kicked the tires. 2 years ago they got farther along. Zeus, I think you're absolutely correct that they would have a hard time trying to figure out how the back end of whatever's going on in the cloud there are going to mesh together. So I dismissed it immediately. I'm glad you guys wrote about it.
Yeah, and to say this point too, I think, integrating those two companies is not as straightforward as people might think, both from a culture and a tech perspective. And the CCaaS market is not accelerating in terms of growth.
Yeah.
Well, and I think too that Zoom was just looking for customers, and if they could pick it up inexpensively, do it. But it didn't go that way, and yeah, I just kind of went, yeah, okay.
Yeah, well, it's interesting to me as well from when you look at Zoom's numbers, actually, how a lot of its contact center companies are actually new to the company. I would think that a lot of them would maybe be UCaaS customers that are just expanding into CCaaS. So it's interesting that they're actually attracting new contact center customers too. So maybe it will 2024, as AS's prediction said, could be the year of the Zoom contact center, but we'll see. And then the next topic that I want to move on to now is Twilio. Not a great couple of weeks for Twilio. At the start of last week, there was a story covering activist pressure to sell and divest its data and analytics business, which includes Flex, Segment, and Engage. Then it was announced that it was moving Flex across to its communications business, and then also it announced more layoffs, which is its third round in 18 months, I believe. I don't know who I should start with. Maybe Dan, do you want to give us your take on everything maybe that's going on at Twilio?
Yeah, I mean, continue with the theme of what goes on once you're a publicly traded company. I honestly think some of what started is when Jeff had what I call lucky bucks, an inflated sets of shares or stock to make acquisitions. Ended up paying way too much for his email thing, and just because when the stock was a certain price when they negotiated a settlement in terms of number of shares, and by the time it got elevated, it was it just created a higher risk for any venture that he had. I don't know. I'm thinking way back when there were two precursors to the whole CPaaS industry, them and Voxeo, and just a lot of credit to the company for building and expanding on what a CPaaS is. And shareholders are unforgiving, so they had an expectation for a certain trajectory for the share price. They tend to be reductive, or I don't know what redactive. They look there and say, "Hey, you're probably worth more if you took this part and moved it there." So any opportunity to react organically to what the market, what customers are looking for, kind of gets discounted if you just start looking at the potential of breaking the thing up and saying, "Oh, you're hiding the value or of these things if they operated independently." And it's crazy time right now. It's the silly season of dealing with your shareholders.
Well, I mean, let's just face it. The past few years and the access to capital in tech gave us a risk reward equation perception that was completely out of whack. Right? So risk reward, that whole thing. We're going to see a lot more activism, I think, coming forward as people look at what are these companies really worth and what the valuations are and where the next round of cash is coming from, but also some of these acquisitions that were made when money was very cheap.
Yeah, I wonder too. A lot of the times you get the activist investors involved too, and they don't really understand the business. They just look at some numbers and think, oh, if we sold this and then we did that, and it's would it make sense to break off pieces of Twilio right now? I mean, the segment and flex pieces are the fastest growing, and frankly, I see data that says that SMS is probably getting softer over the next year. So I don't know, just didn't make a lot of sense to me. But certainly the cost cutting, I mean, you see that every time you get that kind of pressure.
Yeah, I mean, this is the risk of being a public company, especially one that even we have trouble understanding what their business is. And so the street is just, it's so over their heads that they're going to just look at the numbers and that's all they think about. And so Jeff's in a tough spot. And but the underlying technology that they have is really, really good. And these are, I guess, growing pains for going this way. And that's just the way it is. Yeah, they can't make cheap acquisitions now, and they got to sink or swim with what they have.
He was right, though, when he talked about sort of the softening of the SMS market. I do think CPaaS has largely become a commodity. I think even Venmo being part of Ericsson, I think is very damaging to Twilio because they've got a lot more of the telco contracts. And it's interesting. Flex launched around the same time AWS launched Connect, and AWS has sort of been heads down on that and had a lot of nice traction. Where I think Segment actually, well, I think that was a great acquisition. I think it distracted them in a lot of cases. They put a lot of eggs in that basket and they kind of ignored the rest of the business. And so I'm not actually sure, to your point, John, what their strategy is right now. They seem to have a hodgepodge of communication things that kind of loosely go together, but don't really go together. They remind me of like Inkme back in the day, where there was a collection of random internet stuff, right? So it would be good to hear from Jeff actually what their strategy is to try and create a 1+1=3 across all these different products, right?
Yeah. Well, it's dangerous for us because we look at the world here as CX and contact center. That's not Twilio's business, but Flex kind of inched them into that market. They're not a contact center player, but they can bring a very distinct value proposition to the whole CX space. Yes, but this is part of the confusion I think the market would have. They're not competing against Five9. That's not their business, but they come up against these guys all the time. So it's hard to know what is their market going to be. In their minds, it's pretty clear, but it's hard to get that across to people.
Well, it's tough too when you're trying to make that transition from API company to application company. And I think that's been harder for them to kind of justify across all the different things that they do and that they're trying to do. Probably creates a bit of confusion internally, and then trying to figure out what is that overall strategy. I mean, that is a tough one.
And that's going to be evergreen because the appeal is to like the developer class. So the sort of do it, the enemy to the organized ones, the do-it-yourselfers within the enterprise. Let's see how this works.
Excellent. Well, lots of really good stuff there. And it's interesting actually. When I took a look at the last kind of Twilio earnings, they have, I think, it's like 20,000 more customers than they did, something like that, this point last year. Yet their revenue growth didn't have the kind of the impact on the end revenue growth, which kind of perhaps emphasizes how, while their kind of business is expanding, they're not they're landing lots of new customers. They're not really expanding on those because a lot of their solutions may be disconnected to a lot of your points there. So lots of really good stuff on Twilio. I do want to kind of cover the next story now, and this is kind of breaking from this week, and that is news of RingCentral's CEO Tariq Rabati stepping down after just 3 months in the job. Maybe Zeus, I'll come to you on this one because you're normally a man in the know on these sort of things. What was your reaction to that news?
Well, I don't ring really well, and that surprised me. In fact, I talked to one of their larger channel partners, and that morning he had no idea that was coming. And usually he's got a pretty good idea of executive changes there. And as far as I can tell, Vlad founded the company. I think he had some pressure to bring in a new CEO and step back and become a technologist. But he's been very involved day to day, and I think for whatever reason, culture-wise or whatever, Tariq didn't quite fit. And I think the board made a pretty quick decision to put Vlad back in. It's always an interesting challenge too when that happens. Oracle's kind of structured the same way, where the CEO is still the chairman, and then he exits, and he's kind of the boss of the new CEO, but he's the CTO, so he reports into the new CEO. And so you've got this weird kind of reporting method. But RingCentral is Vlad's company, right? And my guess is there was some sort of internal power struggle, and they were going to go the direction Vlad wanted. And like I said, Oracle structured that way. And I tip Larry Ellison's hat, actually, my hat to him, because I thought he was going to, stay almost too involved and drive the CEOs out of there. But he's actually done a pretty good job of not doing that. So I think for Ring, where they are, I think they're pretty close to being cash flow positive. Vlad's taken them up to here. I think he'd like to be the CEO that actually, gets over that mark and gets him to the contact center space and things like that. And then he might feel like job done. But when I talked to him, when they announced Tariq coming in, he was pretty clear to me. He was not retiring. He's staying very actively involved. He still loves talking to customers, and he was going to try and play more of a CTO role. But to me, Ring is a technology-led company, and in many ways, technology, whoever runs technology is going to drive the engine, right? Drive that company forward. And so, I guess it just personality wise, for whatever reason, it didn't work out. But certainly after 4 months, that was a surprise that it did, that it didn't last a little longer than that. So.
I think to that point, guys, yeah, a culture that fit, the style, whatever you want to call it, is probably a factor. But also, to be fair, it's possible that getting kind of under the covers and seeing the realities of the business for Tariq, he might not have liked what he saw. He might have said, you know what, Ring is, in the UCaaS market is very hard to make a buck right now. Everyone's competing against Teams. Where's the growth going to come from? How is this company going to get profitable? He may have kind of taken a longer look and said, you know what, I don't know if I can do this here and kind of be the guy who delivers. And he sure got a nice payday for a very short run, that's for sure. Again, like the sports analogy, Zayas, right? Well, you know what? Well, we're going to buy you out and move on. It didn't work. And there's plenty of sports analogies where that's exactly what happened. But here, it could be from his end, just not seeing maybe what he expected was going to be the reality, and said, you know what? No, I can't make this fly possible.
I mean, it's hard for founders to step back into a different role. I mean, they've been so involved for so long and making so many decisions. And, you're a new CEO, you want to go in certain directions. And if you're constantly banging up against a brick wall because they don't want to go that way, I mean, I'd get frustrated. We'd all get frustrated after a while. And, it just seems like that's it.
It's virtually impossible to be an effective CEO if the old one is still around.
Yep. And especially when he's claiming the executive chairman title and standing over your shoulder all the time.
Vlad should buy an island in Hawaii and hang out. And, yeah, sure. But, no, Zayas, you called him the CTO, but he also added strategist to that. So I think one of the tensions is who's the keeper of the vision, and then the rest of what each of you said just rings true. If everything he does is in the context of the founder's vision, it's like, what am I doing here?
Yeah, and we know who the keeper of the vision is. It's the same guy that's been doing that since the company was founded. So, and in a lot of ways, it's good. To your point, John, right? You pay it out, you cut bait. That's much better than trying to drag it on and see if you can make it work.
Excellent. Well, I think lots of really great discussion today, covering that RingCentral story, but also kind of the Twilio and the Zoom rumors. Certainly a lot of interesting news coming up to the end of the year. It's always in these just quiet months of December and August that a lot of this news comes out. But yeah, I think that's maybe a great place to end today's chat. Thanks for each of our analysts, expert analysts, for joining me today. And thank you all for watching. Bye for now.